A lot of talk right now, Brian. Everybody's talking about it. Beware the celebrity stock pickers. These so-called expert investors, quotation marks, and TV personalities make stock picks all year long. People often joke about if you did the opposite of what they said, you'd become a wealthy individual quickly. You've been talking about this. You've been kind of poking fun at some of this for a long time.
Nicely, though.
Nicely, but many people have taken this sentiment to heart and have begun to do the opposite or inverse of what these experts are saying. The personality who most exemplifies this is Jim Cramer, host of CNBC's Mad Money, who may be one of the most successful stock pickers of all time if your goal is to lose money. Jim has become famous for his flamboyant personality and more recently how inaccurate his stock picks are.
JP Morgan of this generation, Sam Bankman-Fried's FTX,
yes,
is slashing everybody's margin. And average fees per transaction across the industry have declined by 50%. A lot of that is the man, Sam Bankman-Fried.
Dying for you to share with our listeners your thoughts on Jim Cramer.
Well, I mean, what you heard there was him talking about Sam Bankman-Fried.
Oh yeah.
Of FTX.
FTX, yeah.
Yeah, and if you're paying attention to anything in the financial news, you don't have to go anywhere but CNBC or anywhere and find out about the. I mean, it's, from what I'm reading, is about $11 billion in losses.
Oh my gosh!
Yeah, 11. I said it really fast. 11
billion with a B.
Right. And but the thing about Jim Cramer's talking about how he's this amazing genius, and he's very intelligent, obviously, right? He created FTX, and he is a genius, but there's some shady stuff that went on there, and Jim Cramer again is endorsing him basically here, which so did a lot of other people. I mean, we were talking off air,
which kind of moves the needle on its own in a way, doesn't it?
Exactly. I mean, we've got clients that are real into watching and CNBC, and they go, "Oh, I watch Jim Cramer, he's great." Da, da, da. And they're watching him with such respect because he's on nationally syndicated television.
Well, yeah, and has been for a long time.
Right,
yeah.
right. And so they listen to his recommendations, like they should invest their retirement portfolio the way that he's recommending. And it's just some of them. Here's a couple examples, right? We got Cramer's recent blunders would be Netflix and Meta, or Facebook, right? Facebook has changed to Meta.
Yeah.
On January 3rd of this year, Cramer tweets a very simple message: Netflix, buy. And as of today, Netflix is down 47%.
Wow. So the inverse really could have really helped you.
Yeah, if you're shorting this stock, you would have made a pile of money.
Wow.
Right? So in 2021, on October 26th, Cramer got very bullish on Meta, which was formerly known as Facebook.
Yep.
Remained bullish on Facebook, recommending that people continue to buy Meta stock for the next several months, and it's currently down 66%. Right, from the initial bullish call, right? So he did actually just recently get on TV in a very emotional manner, probably from the producers of CNBC. He said, "You need to apologize to our listeners." They're probably getting a ton of hate mail. And made a
and ratings. I mean, they
right.
They revolve around ratings.
Exactly, and made a public apology.
I missed that. I didn't get to see that.
He had to eat some humble pie.
Oh yeah,
and for his Meta pick due to how vocal he's been on the bullish stance. And so a lot of Jim Cramer's recommendations have been so inaccurate that now he has a loyal following of investors, follow me here, that do the opposite of what Jim recommends.
That is unbelievable. That is not what I want to be known for.
Right. They call this the Cramer effect. It's basically, all these loyal fans, on Twitter, they follow him and track his picks, and then they let you know that you should basically do the opposite. And there's one that's called @Cramer Tracker, and it basically has been around for over a year. And it basically shows when he's making buys, right? What it looks like, what the performance is since he.
Oh, okay.
Right, told you to buy it.
Yeah, they're testing it, back testing it. Yeah.
Right, exactly. So, they're posting pictures of their profit and loss in the green by doing the inverse.
Wow.
Doing the opposite, right? Shorting the stock, basically, which is betting, that it's going to go down. So
how long ago did this happen? This was just back in October? Is that?
No, it's October 2021.
Oh, okay.
Yeah,
So
and then January 30 said to buy, Netflix.
Okay.
So The problem is there's an ETF that's coming out too, that is basically going to do the same thing, right? It's basically the opposite of what Cramer is doing and recommending. So it's interesting, and the problem is there's millions of viewers that are watching and listening him, and
maybe not still.
I don't know, yeah. but they don't see the real results. So anyways, there's a lot of inaccuracy. There's some Unusual Wells. It's an options order flow platform that tracks all of Cramer's picks as well as the inverse of these picks. And over the last 6 months, that inverse, which means it's doing the opposite, it's up 19%, which
doesn't necessarily mean short selling, but doing whatever is the opposite of what the Cramer effect.
So whereas the pro Cramer ETF is what he buys and sells, what he sells is down 24%.
Wow.
So there's a lot of there's celebrities. So that's the problem. They're entertaining. You really should. The point of all this is that you should be looking at your long-term goal for retirement, right, and not using an entertainer for the
for your financial planning,
right? For your financial planning, for the safety and security of your financial plan.
Yeah.
I mean, sure, if you want to have some play money and you want to put $5,000 into it, and you want to buy 1,000 of stock here or 2,000, it depends on your net worth, of course, right? Somebody's worth $10 million, sure, they want to put 100 grand and play with Cramer's picks, fine. It's not a big deal. They're not going to lose. If they lost it all at the end of the day, they're going to be okay, right? But for someone because some of the folks that we've listened or have come in our office said, yeah, I listen to Jim Cramer. This is where I get my stock recommendations from, and they don't have enough to lose. They're in that under $1 million area of net worth, and I'm just going, this is probably not.
I know you well enough to know that you're not going to chew them up, but you're going to diplomatically let them know.
Yeah, it's just
let's look at it this way.
Well, the problem is, it's a little bit not pump and dump, but it's almost like that where someone pumps and promotes a stock. It does go up initially because there's a lot of buying action, right? There's millions of people buying small amount of shares all over the country. Maybe it's 10 shares, maybe it's 100 shares, whatever it may be, and it does drive the stock up, right? But then when it's overly inflated falsely, it drops like a rock. Right, and because there's nothing backing it up, there's no earnings, there's no other besides somebody promoting it, right? And so, that's there's a lot of.
By the way, we're not being facetious to Jim Cramer personally. It's a stock picks.
Yeah, no, and it's more importantly,
I'm sure he's a nice guy.
He's a entertainer.
Yeah,
and you don't want an entertainer to have. Put together a solid financial plan, right, for you in retirement.
Well said, Brian Bowen.
And a lot of them are very short-term holds too. I mean, it's not day trading, but it's very short-term trades. Which the way to build real wealth most of the time is this long-term. I mean, we were just talking.
It's not being short-sighted. It's the long. Yeah.
I mean, some of the best positions I've ever seen in clients' portfolios, ones that they held for 5, 10, 15, 20 years, right? And they just held on to them.
Turtle, man. Slow and steady wins a race.
Yeah, and there's been months or years like this year where they're like, it's down a little bit. Yeah, but they still had 8 to 15% return on some of these, even with the down market. They've built up wealth by real estate. Same thing, right? I ask real estate investors, did you lose any money in real estate? No, I've never lost money in real estate. No, of course you have. First year you did. You bought it. You put a bunch of money into it.
Yeah, right.
What your net profit after income was a loss.
Yep.
It was.
Oh, yeah.
Nobody looks at it that way because it's just, I paid $300,000 for it and doesn't show up really anywhere except a tax return. Like, I could analyze it down for them. I've had to do this before when they say they make like a certain amount of money. I'm like, okay, well, you really don't make that much, actually. You net $60,000 or gross $60,000 or you gross $200,000 on your apartment buildings and all your rentals, but your net is you're losing every year.
Well, yeah, and it's debt.
Right. You got interest costs, taxes, insurance, repairs, upgrades, improvements. There's all those costs in real estate. Maybe you're paying property management fees to someone else, and all those.
So much over and above just the loan.
Right. Yeah. And so just the same thing. Real estate long term, is it a great investment? Has been for been a for families that have, $5-10 million net worth, sometimes it's half
Ups
or
and
more.
downs, peaks and valleys, but,
It does.
but traditionally up.
Yeah. And so I think, that's the other thing. And getting to the other thing on FTX, we're talking about FTX, basically it's a crypto brokerage. I mean, they created it to trade cryptocurrencies on
The kid did, whatever the
Yeah.
name of the kid that you were talking about.
So Tom Brady to Shaq, to his wife, and what was his wife's name? I can't
Giselle Bundchen.
Is that how you say it?
Yep.
Yeah, thank you. Well, it's his ex-wife, actually.
Right.
Yeah.
Or soon to be.
But Mr. Wonderful from Shark Tank.
Yeah, Kevin O'Leary.
Kevin O'Leary was another one.
Ouch.
Yeah, so we'll get into that in the next segment. But, the point of all that is, we've been talking about this for years because people have seen the wealth that's been built in cryptocurrencies, whether it's Bitcoin or Ethereum or you name it. What was the one that you invested in? You made a lot of money.
Shiba Inu.
Shiba.
Yeah. Yeah.
Shiba Inu. Sounds like
I made
sounds like a
about
rare dog or
negative
something.
$210.
Is that a rare dog also? Did they name it after a dog?
Yeah, they did. Yeah.
Oh, okay.
It is. Yeah.
But the point is everybody wants to get on that train. It's the gold rush, right? It's the, I want to go out west because all the people are making all this money in gold, right? Back in the 1800s, right? They run out and they find out not everybody's turned into billionaires,
Yeah.
right? It's a very small amount of people. And that's the same thing. People jump on these trains of, they're going to build all this wealth. And people are taking their hard-earned savings into something they don't fully understand, and the risk is incredibly high.